So when we talk about major and minor structure, first of all, you need to understand the concept of the swing point, okay? The swing point. This can help us to identify which one is the major structure and which one are the minor structures, okay? So when we talk about swing point, I said these are the most highest point or the lowest point. The lowest point, okay, in the structure. Now I'm not talking about highs and lows. Every Not every high and low is a swing point, okay?
Yeah, understood.
Now here I'm talking about the combination of multiple structure creating a bigger structure. So we say the market is chaotic. It can provide something like this, maybe creating a structure like this, and then price goes up and then comes down, creating a structure like that, and then moves again, and then continues creating structures like that. Okay, so here we have a major structure and a minor structures. So when we talk about the swing point, this is the most highest, the lowest in the structure, not the market itself, the structure. Now when we talk about the structure, is we are talking about when the market breaks the previous high or low, that becomes a structure. This one here becomes a structure. Okay, are you getting it?
Yes, I'm getting it. I'm getting it. Just one question I want to ask before we
Okay,
proceed.
okay.
Can we record this session? Because after I'm finished with it, I will go through back it.
Yeah, I'm recording.
Yes, thanks.
Okay, so this is a structure. Now when we combine multiple structures and making another structure which is bigger, like this here or this here, breaking the previous most lowest point, like this becomes a major structure. Now swing point are the most lowest points of the bigger structure, meaning it complies many structure inside but making just one structure like this. So swing point here, this is the swing low, this is the swing high, the swing low again, the swing high. So major structure is the structure with the swing point. So when we include swing points, that is the major structure. So this is the major structures. But
Okay.
these are the inside structure, the small structure inside the major structure. So you can see this is the major, minor. You can see minor structures, minor structures, minor structures. These are the minor structures, okay? But this minor
So the
structure,
minor will be on the left and on the right,
yes,
both sides.
yes, both sides. So you can see it's like a trend. Market is going up and then changes, uh, perform a transition and then create a downtrend like this. But all of this is just to create a major structure like this. So that is how you can differentiate. And we said also there is a law of how we are going to trade this major and minor structure. Okay, so we have the major here and we have the minor here. So the thing is, when we have a major break like this, yeah, this is the major break of structure, major break of structure. When we have a major break like that, we're not allowed to consider only the minor structures. Why? Because the market tends, when the market breaks a major structure, we should not consider these small structures. Okay, we need to consider the whole structure, meaning if we want to make decision inside that major structure, when we will have to consider the whole structure in trying to find the most possible area for the market to react and move. So if we have a major break and we try to consider only the minor structure, you may find being stopped out and then price moves to your direction. Why? Things because the market breaks the major structure, okay, and price consumed all the liquidity, for example. So it's not all the time that the market consumes just the liquidities which are near to the breakout point. It's not all the time, and we are going to see the reason. But most of the time, when we have a major break, we have to consider the whole structure, meaning we will have to find the most possible area for the market to react, where we have to consider things like an area where price did not consume. You know, we have to consider the entry types and all that, like things like that. So when we have a major break, we should not consider all minor structure. We need to consider the whole structure. But when we don't have the major break, but we have only the minor break, now we are allowed to trade the minor structure. Meaning, when we have something like this, example, this is our major structure here. The market is trying to create something like this, and then when it perform the transition, trying to go and perform a break here, then we have a minor break, but yet to have a major break. So in here, in this scenario, we are allowed to trade this minor structure.
Not the one at the top.
No, not at the top, because if we have a major break, now we can consider all the structures and try to find which structure, which minor structure is not yet consumed, or which one is likely for the market to come and react. But if we have only minor structure, we can only consider that break, that current break.
Understand.
So we can trade that. But if we have the major break like this, now we should not consider this minor structure only. We have to consider the whole structure, since the market will perform a reaction inside and then moves. See?
Yes, downwards.
Yeah. So that's how you can try to differentiate this major and minor. And it is very, very important because you may find sometimes being stopped out and you're wondering what is happening. It's sometimes, you don't consider this thing of major and minor, so it's very important to consider this theory. So okay. Okay, so for example, we can try to look some of the examples. Now, it's very, no, the market cannot print perfect structures like the way I drew here. So the thing is, you have to use the knowledge and see the resemblance in the market. So look at this. We had this is the major structure here, complying with several minor structures inside. So inside here, we cannot trade only the previous minor, the current minor. No. We have to consider the whole structure. The whole structure. So you can see we have reasons why price went all the way up. So we have reasons like the fundamental reasons and also technical reasons also. And one of the technical reasons we are going to study it in this topic, structural verification and FTA. So don't worry about that. So you can see that was our major structure, and we have several minor structures inside. Several minor structures inside. And the way we mark breakout point, I don't know if you got that. The way we mark breakout point, it doesn't matter the BOS, the break of structure, or the change of character, or sometimes we call it transition. The transition. The way we mark all this is, the high or the low always have two candles, two different candles printing. Okay, so when we have a high or a low here, at this point and this point here, we always find two different candles. So in here we will find the bearish and the bullish. Here we will find the bullish and the bearish. Here the bullish and the bearish. Here the bearish and the bullish. So we will always find two different candles printing the lower low or the lower high. Now, in between those two candles, we need to find the longest wick between those two candles. Okay, I don't know if you're getting. For example,
Yes, I'm with you. I'm with
so
you.
okay, so so for example, this is the low printing two candles. So this is the low here. Now, we need to find the longest wick between those two candles. So if this is the longest wick, that is the point where you need to mark your swing point area or your high or a low. So that is the point you need to mark that. So in there, from there is where you're going to see the what? Whether the market performed the break or a change of character. So that's why I marked this one, this point here. That's why I marked this point here, and so on and so on. Find the longest wick, mark that. Find the longest wick. For example, in this miner here, this is the perfect example. In this miner here, you see the price. I marked this point as my breakout point. And why I marked this instead of this one is simply this wick or this candle is not the one that created this high. Because if we move to the line chart, you see the point where I need to mark the high is this one. And which candles that makes that high is these two candles. So between those two candles, we mark that the longest wick between those two candles.
Okay,
Yeah.
understand. So, in marking off these structures, right? The major structure, right?
Mhm.
Is
Mhm.
there a specific time frame you have to mark it off on?
No, no, no. Right now, don't consider the time frame. You just the same time frame you are in. That's the same times you are going to define the major and minor structure. You do not shift time frame at this point. Okay.
Okay, okay,
The time frame that you start your analysis, that's the time frame you need to define these things. So you can see this is our
so
yes.
that level that you mark off there, right?
Mm-hmm.
That will be your major high, and the bottom one will be your major low.
Yeah, yeah.
So, if you notice, you said it could either be fundamental and a little bit of technical analysis.
Mm-hmm.
Make it break out of the major swing point, right?
Mm-hmm.
So, we're not going to consider any of these structure that is out of the major, which can be normal break of structure. So, what we're going to look for is any area in the major structure for a weak liquidity point, right? For price to move in the opposing direction back again. Am I right?
No, not all the time that you're going to consider the major structure as your
Mm,
point of interest for you to make a decision. You can look. This is the best example here. We had a major transition, and then price did not come all the way in towards our major structure, right?
yeah,
And you can see
yeah.
price just performs, creates minor structures and then moves all the way. So not all the time you're going to consider this, but traders should consider the information given and try to look the structures supporting that information, and not just to look the structures and trade exactly the way the structure shows you. So you can see we did not enter all in this structure. Okay, we just we had a reaction at the area of break, the breakout point. and we have reasons. And
Yes.
one of the reasons is the topic that we are going to study today. So um, we had a small reaction, and then price tried to create minor breaks of structures, and then price react on them, and then we took those liquidity. So not all the time you're going to consider. The thing is, we study concept, and then we look for the information and try to look the structure supporting the information. And the information is simple. We look the fundamentals, and then we try to look the structure supporting those fundamentals. Simple like that. Because fundamentals are the one driving the price of the market, and it's not technicals. The only thing that technicals do is to align us traders with the the information that we get in the fundamental factors. Okay, so not all the time it's going to do this.
Okay, I understand what you're saying there.
Yeah. So you can see we had several major and minor structures where price react often. You can see this is our swing point area, and this is our swing low here, and in there we find the market creating minor structures inside. So you can see price break that, and then we react just at the area of break. There is a reason for that. Then we have another one. Price created a small minor structure, and then we see it stopped out that area to react on that breakout point, and then price created another breakout area. See, now this is one of the reasons why I say if we have a major break, you should not consider the minor structure. You see, we had this
Yes.
major break here, so this will be our swing point area and our swing low here. Now, if we would have to consider this minor structure after this break, we had this another break outside here. Okay, so this becomes our structure again. So if the price were to react in this structure, we would have known. But you see, price stopped at that area, react to this major structure that we break before, and then price moves. So if we consider the minor structure, you'll be stopped out. So any area where we have a major structure, you should not make decision just on the minor structure. You should consider all the whole major structure. So I hope you are getting the point. So are we together, sir?
Yes, I'm understanding you. Yeah, I'm understanding you.
Yeah. So that's
Makes a lot of sense. Yeah.
yeah. So that is how these things. So you can see this is another example. Here we had a major break, and we have minor structures inside. This is our swing point area and another swing point area. So you can see price went all the way in. This is USD JPY, by the way, at the 1 hour. And you can see price went all the way in to consume all the liquidities, and then boom, price created another major break. So if you consider the minor structures inside the major break, you will have a small reaction, but price always tends to consume everything in the major break before the major move. Let's see.
Yeah.
So minor breaks are like the reaction point, no? For the market just to react for a small move and then continues to consume everything in the major. So that is the concept between about the major and minor structure. Maybe you have any question from?
Yeah, yeah. I understand that area there.
Mm-hmm.